Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, March 6th. Hope you guys having a great day and happy Friday. I hope you guys got some great upcoming plans here. We do got some important data coming out today, and that is from the Bureau of Labor Statistics, the jobs reports we've been kind of waiting for all week. We'll start off with the non-farm payrolls for the month of February. So, previous 2 months, good news, revised 85,000 higher. So we had new jobs created. That were increased, those two numbers. So December went up 37,000 from 147 to 184,000, and January went up 48,000 from 225 to 273. So this is why we have a pretty high number here for January, even though it was pretty high prior, but it's even obviously much higher. We had expectations or forecasts of about 165,000. As you can see here, we blew that out at 273,000 new job creation. So great data right there. Looking at unemployment rate, we see a dip. We went from 3.6%, forecast gone 3.5%. It came in right at forecast at 3.5%. Then we got average hourly earnings for the month of February. So as you can see here, from month over month, we had January, it went up 0.2%, and forecast gone for 0.3% for February, and it came in expectations. However, it's year over year did have a slight dip. It went from 3.1% down to 3%, but month over month, we did show an improvement there. On the other note, wholesale inventory is still kind of lacking. It's contracted 0.3% in December, and January contracted even further, another 0.4% in January here. So overall, great data there on the jobs. If we look at that altogether, I mean, even the labor participation rate remained unchanged at 63.4. Weekly earnings went upwards from on year over year from 2.5 to 3%. So some great data we were seeing out of the jobs data here. However, headline news, stocks are way down again, and because you know what, that's taking second seat to the coronavirus. Coronavirus, of course, is dominating the headlines right now. We're seeing, the global spread. We're starting to see more and more cases pop up here in the U.S. So that uncertainty is creating a lot more concern and worry in investment in the markets here. So as a result, it's helping out the bond market and helping us out here in the bond market. So right now we're up about 38 basis points. We're up where we were earlier in the week, testing this next floor or ceiling of resistance here. So pricing will improve today. We're not seeing pricing. Just to give you a heads up, we're not seeing pricing improve as much as we'd like to see. It will probably shake itself out. Part of it is the buying between treasuries. If it maintains that level, and that of mortgage-backed securities, because we've had some pretty big swings. Investors are kind of leery about giving too big of swings with their pricing going back and forth. And what's happening is that when we get refinances, a lot of these investors are losing the servicing side. So they're losing money on one end, but they're gaining money on another end. So, they get a little hesitant. So you don't be surprised if you see, even though when we look at these charts, we should see better pricing, but you're not seeing it being raised in the with the lender right now. It's not that they don't want to give it to you; it's just they're trying to hold back because they're losing money from the servicing side when they lose bonds from there. So they're trying to get some type of balance in there and still be able to pass that out. So just give it a few days to shake out sometimes, but eventually it'll get there. And assuming that, of course, we maintain those levels, because as you can see, we've had some pretty big swings here, up 38 basis points. We've had these, I think even up 63 that one day. So we've had some pretty big swings here. Just sometimes you have to be a little bit patient. And yields, wow, we had a huge drop. We're down about 20 basis points. We're just about down to the next floor of support. This floor of support just got blown right through. We're at about 1.723, I think it is, and right this floor of support is at 0.714, and could easily be going down to the 0.6, the 60 level here, 0.6 level, and maybe even 50 here very soon. So yields are taking a huge beating here, and we would normally with this big of a drop, we would probably see more of a improvement in mortgage-backed securities. But with the buying and how they work it out, we'll have to see that shake out over the next few days here. Probably see some improvement again, assuming that we maintain this level here. All right, so that's to recap, mortgage rates are better today as a result. We're having a good day here in the mortgage-backed securities. Obviously not good for equity markets, but for mortgage-backed securities, the money's flowing from equities over into what they call a safe haven, flight to safety for mortgage-backed securities and bonds. So we're benefiting as a result of that. So if you're buying or refinancing, good times. If you're in California, give me a call. I love to be able, or actually, best way calling me is not the best way to reach me. It's best way to reach me is either direct message me or email me, and those are the best ways to reach me. I do respond quickly to email faster because I get those in more time. I'm not always on the social media when you direct message me, so I don't get those as immediately, but I do respond to both. But if you like to have some assistance, I can certainly help you out if you're buying or refinancing. We are a lender here, and we have carry a lot of different loan programs, so we can help all people. So again, email or direct message me. Information here in the red. You guys have a great rest of your day. Thanks so much for watching and enjoy your weekend. And we'll see you in the next video on Monday. Bye bye.